Well, as a podcast for the people, we continue our mission and quest to always provide the coverage that, frankly, lacks everywhere else. Because I don't think anybody else is doing it the way we do it. I don't think anybody else is able to cover it the way we do. And I would argue, this is my opinion, I would argue that there's a lot of shill, arguably, even in some areas where they're down on a project. Like you'd have somebody that thinks it sucks, but they're like, well, maybe I'll toss a little money at it, and that's fine. That's an investment strategy. So what we try to do is we're open. We know sometimes there's a lot of flying information. There's so many people covering different things. And it's hard to follow along. So what we do is we are open to anybody that wants us to take a look at a project that they got their eye on and give our honest thoughts. And frankly, all we ask is again, don't go in it already having decided. If you've already decided what you're going to do, there's no reason to ask me. But if you're not sure and you're kind of on the fence, not trying to influence you, you just want our thoughts, pros and cons, we're happy to cover it. Give us the name and what we need to be looking for in our comments on our channels or at cryptotalkradio.net in our comments box. We love to do it. So we're happy to do it. And we got one. We're going to cover that one now. Listener Monster Bull underscore Bull says, quote, love your content. Have you looked at Aalto with two A's? And of course, I have never heard of this project at all. Didn't know anything about it. I know now why I didn't hear anything about it. I'm going to go ahead and cover it. Thank you, Monster Bull, for the suggestion to take a look at this one. Monster Bull, I I want to call it one of the cucarachas because it does qualify as one of the cucarachas because it has the unrealistic APY. But there's thought put into this one, so I don't know that it really qualifies in the cucaracha category. So I may need to think a new category. Regardless, there was thought put in this. There was some planning that went into this. There was at least some effort here. There are some strong concerns. Some of them are not the project's fault. Some of them are. And I'm going to break this down. Let me just summarize what's going on. And I figured I'd do it in this format because visually I think you can follow along if you want. The site is aalto-protocol.com. Aalto has two A's. AALTO-protocol.com. Check out the site and see if it makes sense for you. The description on this particular coin, it's on the Binance Smart Chain token. It's on the Binance Smart Chain. And it's what people believe is that they've taken parts and pieces, and even in their contract, they say they took parts and pieces of Seifu, Titano, and Libero and tried to build a better mousetrap, right? So they refer to themselves as, quote, the most advanced auto staking and auto compounding protocol, quote, earn stablecoin rewards in the deep blue bank while your Aalto still rebases at 2.3% daily. The APY is like over 402,252.1%. And all their naming is around ocean or deep sea. So you have the deep blue bank, you have the coral preservation fund, you have the rising tide for liquidity. So again, marketing wise, I think it's very well done. The site's decently well done. I can't say it's amazing, but it's certainly better than other garbage that's out there. I would put it probably at a B in its presentation. It doesn't overly try to sell you on something. It's not like the Car Salesman 2.0. It's a decently well done website. There's a lot of good visual techniques on it. They do have a white paper. It is not the garbage get book, but it's not a PDF. It's a straight website. It's called Notion is the tool, notion.site. I'm not a fan of it. I still like the PDF for white papers because I want it to be portable. So I got to hold them to the same standard in that I think the white paper needs to be a portable document, not something that is a page like the garbage get book or even this Notion, because you could just make secret edits and then people wouldn't know. They got the insurance. Every concept is the same as like what Libero and Seifu are doing. An insurance fund they call coral preservation. The bank concept is started by Libero. The quarterly bonuses. Libero is a monthly deal, so they have the Binance USD, and every month you get rewards based on what's in the bank. Theirs is a quarterly. They call the tidal wave rebate cycle. The treasury concept is across all these similar ones. They call the treasure trove. An auto burn they refer to as the Mariana Trench. And then all of these have, quote, an auto burn. I'm going to come back to the auto burn because I don't know that that's, I understand what they're saying, but there's a little bit of issue there. Rising tide is auto liquidity. All of them have that one. They refer to a bartering system. So bartering is similar to a bond. This was originated by the Libero ecosystem. You input some tokens and then you get tokens out on a discount. And then based on the needs for the liquidity pool, they would adjust this. So it's the bonding type thing. They called out venture capital, angel investor. I don't know that it's venture capital in the way it's qualified. It's more like angel investor. So what they're offering, and they said that the list is filled. What they're offering is to say, basically, for 5,000 BUSD, you get this package. For 10,000 BUSD, you get this package. And then you get a certain number of tokens, and they're vested, and there's dividends, and all these things as part of being angel investor. That's intriguing. Anybody can fundamentally do this for any project, but they put some structure around it. So, and it looks like there's a list. Looks like their go-to for communication is Discord, not Telescam. So that's decent good that it's not Telescam at least. So everything that they talk about is in the Discord. They're talking about yield generating NFTs down the road and then tying into real world assets. So there's a lot of things. That's why I said that a lot of thought was put into this. It looks like it was well described and designed. Appears to have started off of a pre-sale. I'm always concerned when I see pre-sales. This is after the fact. It's already gone live. It started at like 10, $11. It's up to like $17 or something, some odd. So, and this came because of a different group. And here's where my concerns start, by the way. This was originated by a different group called Ames, AMES.DeFi. And they're on Twitter. Now, here's where I started. Again, I look at this and I'm like, okay, it looks pretty good and that's pretty decent. And seems some thought was put into it. When I saw that it was Ames DeFi, here's the problem. Because I want to give you some story because it actually ties to some coverage I did very recently. Ames DeFi, they created this stablecoin concept, but they tied their Ames token as far as the backing stablecoin to UST. Read, because, of course, UST crapped because it's part of the Terra, and it's not the Ames fault. The point is that happened, right? So there was a risk that they didn't know about, and then it crapped, and then they rushed to tie it to Binance USD, and they successfully did that. But because they were associated to the Terra ecosystem, here's where I got lost because I was not aware of any UST on the Binance Smart Chain in the first place. So then I'm wondering, and I didn't go deep because I didn't want to spend time on it. Then I'm wondering, is there some other risk in the way they've got it backed? Without going any deeper and seeing that they moved the Ames over to Binance USD and that they were the ones behind Aalto. Aalto showed up shortly after this fiasco with UST. So now I'm thinking, okay, maybe this was kind of an urgent rush to generate some money. You see where I'm going with this. So then I start looking at the contract. I run it to Market Move. Read. Market Move cannot scan the contract. Well, that's weird. It should be able to because I see it's working. People are buying and selling. I ran it through BSC scan. The contract has Solidity issues. I looked at the manually, just ran through the code. The code actually looks pretty good from my eyes as far as nothing that was a risky function or any of that kind of stuff, but there's a lot of Solidity issues. That concerns me simply because when you build the Solidity code and you do the compile and you do everything else, there's tools that the IDE gives you, the development tool gives you to be able to resolve issues before you publish it up to the blockchain. And then you're supposed to run through a verification. The verification happened, the contract verification did happen on BSC scan, but because of these compiler errors, external scanners can't really parse it correctly. That creates a risk because you can't know what's going to happen down the road with whatever the issues were. Like you could have attacks, like something could just drain liquidity, or you could have attacks on the back end if they're not resolved, right? So not understanding, okay, well, why did this publish and why did it start trading and why did it go to pre-sale without these issues resolved? And I'm not really knowing what's going on. I looked at some of the basics. They have a tech rate audit, which if you know me, I don't rate tech rate. I looked at their audit. It was garbage. It didn't tell you anything. It just basically said there was a couple of small issues, nothing worth worrying about, which correlated to the code, but my review. But because of the compiler errors, tech rate skipped over those. That's a concern because they should have called out any sort of compiler errors. There was a KYC done by AssureDeFi. I'm fine with AssureDeFi, but I'd rather see names, faces on the site, and LinkedIn links so I can understand who you are and what your background is. I know that it's Ames.DeFi, but I don't know what that means. And because it's Binance Smart Chain, and because there was a pre-sale, and because of these compiler errors, there's 3 layers of potential risk involved in it. So I go a little bit deeper, and I'm not able to correlate. I see that it's got positive trends. It's growing a lot of holders who are likely FOMOing off the green candles. No problem. Here's my summary thoughts on this project. I think the idea is good. I think the marketing strategy is good. I think that what they want to do is good. I'm not sure that it's going to be sustainable as built. And I'm not even talking the money, I'm talking the code. I suspect that it's going to get hacked or some other issue is going to happen with the code where they're going to either get drained and go away or they're going to have to do a V2 at some point. So it's one of those where if you choose to go in it, I mean, I don't see anything wrong as far as like functions necessarily in the code, but you do, and like even in the holder counts, like there's not very many whales. There's not like the owner doesn't hold a lot. So I didn't see holder risk. It's the code. The code feels like it's fragile, I guess is the best description, because it feels like it was rushed out. It feels like this is my story. It feels like given that they were back to UST at some point, UST craps due to no fault of theirs. The point is UST crapped off Ames. Ames needed to figure out how to recoup money, and they spun up this Aalto, basically copying Seifu and Titano and Libero and doing some minor tweaks, and then just rushing out of marketing, put it out there to kind of generate money to recoup what they lost. That's how it feels because that's what I'm seeing on the social media chatter and the code and everything else tying together. It feels like this is a reaction to the issue with UST. And if that's true, I don't know that enough thought and planning behind the scenes was done to make sure it's a stable set of code so that it has rigor behind it and it's not going to be breached or hacked at some point in the future. Remember, I said, even Thorium had been hacked and it's actually a V2. It had been hacked before and they had to learn from that and they had to redo everything from scratch. And then they had other projects that also got hacked. These types of projects are fair game for hackers if you don't get the code just right. That would be my only concern is the code and seeing these compiler errors and not knowing why there are issues. I would like to see them do a Desert Finance audit because Desert Finance is going to call out much deeper things than I can see. I would like to see names and faces with a LinkedIn on the site. Beyond that, again, I like the marketing. I like what they're trying to do. And if they're serious about it, I'd love to help them in some of these recommendations, because there's nothing wrong with competition. And perhaps they're able to get people to FOMO into it, but I wouldn't want people FOMOing into it. And then it turns out that somebody drains all the money out of it. And I think they need to resolve all these underlying issues prior to something like that happening is my gut speaking. I can't say for 100%. I'm just going off what I see that it feels like whatever that tie to UST might have caused them to basically create this urgent project and spin it up quick to try to entice money from other people to rebuild what they lost. Well, that means that you're not in the positive. You're still trying to rebuild off the red and the Ames holders. Did you make them whole? Are you sending, are you robbing Peter to pay Paul? Are you sending Aalto funds to the Ames holders? Like, there's a lot of questions there. And again, if they want the smoke and come on the show and chat with me, I'd love to chat with them about the project and course correct on some of these things I'm seeing. They are things. You can see it on BSC scan that there was compiler issues. I just don't know why. I understand the tech rate, but the tech rate didn't call out those issues. I'd like to know why. I'd like to see a Desert Finance audit because they're kind of like the gold standard on the Binance chain. And the fact that these external scanners, at least Market Move, is not able to parse the contract, I'd like to understand why, and I suspect it's the compiler errors. The final point I'll leave, and again, if they want to chat it out, we can chat it out. I went ahead and kicked Token Sniffer. Again, Token Sniffer, I don't really trust it fully because sometimes they make errors. So like they said the selling fee and the buying fee are high. That's like normal. So I don't listen to that. But what they said was the contract source code was not verified on BSC scan. And so that's the same thing Market Move said. BSC scan swears that it's verified, but still the compiler issue. So I think the compiler issue is blocking these scanners from being able to do analysis. Doing that can create a risk, and that's why I'm trying to call out here. It says that the ownership is not renounced. It says that the ownership can do all these issues, and that's a risk as well. And it seems to think that there's some whales that hold a lot of supply. I didn't see that when I scanned it, but Token Sniffer swears that there's a problem there. It didn't have any issues with liquidity, and neither did I. I didn't see anything. And it seemed like they are burning liquidity. So that's a good thing. So again, I'm not saying to you that I think it's a scam or any of that. I'm saying that there's a lot of risk as far as the lack of renounce, the compiler issues, which could create a breach risk on the back end, whatever token sniffer's squawking at with the holder, whale holder situation. The fees don't bother me too much. So I don't have an issue on that one, but I'd like to get a Desert Finance audit on this and figure out what the heck's going on with that one and see their results, because they're going to tell me right away what the heck's going on. And I would love to hear an answer directly from them in terms of this whole Ames token and the UST and what happened there. I know they moved to BUSD, but this, Aalto then shows up out of thin air immediately after that situation. And are you moving that money to recoup the Ames people? If so, that's not sustainable. You're creating a Ponzi. Let's talk it out. If you want the smoke, I'd love to help you. Aalto with two A's, aalto-protocol.com on the Binance Smart Chain if you want to check it out. Once again, I'm not telling them or accusing them of anything. I'm saying I see some risks and concerns, largely back end. I like the front end. I like the marketing of it. I like that they're not dependent on Telescam. So the front end I'm cool with, but I want to try to figure out, solve this smoke that's here and there and tell the story and get it to where it's cleaner so that investors have a little bit more confidence to buy in. Other than that, I would support you. And, again, I don't want to have a risk that something's breached on the back end due to whatever this oversight is on the compiler side.